Good morning, trading world. It is September 7th, 2022, 7:53 a.m. on the East Coast. And this is my pre-market outlook and technical analysis for day trading the SPY. Continuing with the theme from yesterday, we seem to be flattening out, moving more toward the middle of contango and backwardation when it comes to the VIX. Right now, the VIX 9-day is at 26.99. The actual VIX is at 26.57. And the 3-month VIX is at 27.59, while the 6-month VIX is at 28.89. This makes it harder to see direction because we are set up to slip easily in either direction. But my feel is that the market is a frog sitting in a slowly warming pot of water. Feels good now, no rush to get out. But by the time we notice the water is boiling, it's too late. This has me wondering if there is a pop back up coming, or do we slowly slide off the edge of the cliff? The 4-hour time frame is key because we are already oversold there and on the daily. Today I will be watching the dollar and bonds closely. Alright, I just brought up a chart, a split chart of a year or daily on the bonds here and dollar here. And as you can see, the dollar has been creeping up, pushing its new highs, while bonds have been sinking lower and lower, headed back towards their low of 131. Now, as bonds continue to slip, there is no way tech can hold its place on the ledge. It will go over, dragging everything else with it. This is a precarious place we're in. If you're positioned short already, fine. But right now, we are in the hole, and this could blow up in your face at any time if you're trying to get short now. Excuse me. With that, let's take a look at the key levels of the day. Alright, here we are back with the key levels of the day. Starting on the resistance side, we have our jack resistance at 391 to the 392 area. Queen resistance at 393 to the 394 area. And then king resistance 395 all the way up to the 411 area. On the support side, which is going to be really important today, we have our jack support at 390 to the 389 area. Then we have our queen support 388 to the 387 area. And then king support 386 to the 385 area. The main thesis again today is bullish, closing above the 390.76 with a projected target high of between 391 and 401. The alternate thesis is bearish, closing below the 390.76 with a projected target low of between 389 and 384. The current major channel we are in is 397 all the way down to 379. The major channel above is 397 up to 416. We're in a bit of a slow building gamma squeeze. So be careful of the explosive alternate thesis moves all week. Like I said earlier, we're kind of in the hole, but we're deep enough in the hole that we could actually break through and slide on down to the next level. And it kind of starts all over where you think that we're oversold, but we can break through to the next major channel, and that kind of oversold just kind of starts over where, you can forget about it. So we have to be careful of that. And again, that major channel at 379, we have some very, very important levels down at around that 385 and then also 382. So if we start to slip and this thing gets ugly, we can continue to sell off and may hit speed bumps at those levels. But right now, the way the market is set up, kind of angry, we could actually slip off the cliff, and there's no telling where we could go to from that point if we slip down below that 385 area. And like I said, the next speed bump that I saw was around 382. But then again, those are just that, speed bumps. So you have to be very, very careful right now. With that, let's get into the scenarios of the day. Alright, our first scenario and most probable will be our expansive range day structure. We can have an initial pop up, find resistance, and chop lower in an orderly fashion until all of a sudden it's not. And this kind of goes along with that term that I said that, the market is like a frog sitting in a warm bath. And if you sit a frog in warm water, they're comfortable. And if you slowly increase the flame, increasing the temperature slowly, they're comfortable, and they'll basically be comfortable in their own pretty much death, because they won't know when the water is too hot and boiling and too much. And by the time they figure it out, or if they figure it out, it's too late. So that's kind of how I see the market kind of sliding off the cliff per se. Just orderly, this just kind of orderly descent down until we're off the cliff and it's too late. And then that's that point where everyone starts reaching for volatility or puts and buying them off crazy. And that's the reason that the VIX kind of shoots up like a rocket all of a sudden, because everybody's comfortable sitting on the edge and, us easing down lower until all of a sudden they're not. So the expansive range day structure is our most probable scenario today. Let's get to the next one. Alright, our next scenario is our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area, find midday chop around either the queen or king support before spending the same energy we use coming down to go back up the second half of the day. As always, with our rounded reversal day type structure, we have a vice versa alert, which could play out like this, where instead of a continued push lower, we kind of get some reverse and build into some bullish activity before the open, and wind up continuing higher through the cash open. We find our midday chop around either the possible queen or king resistance area, and then to finish the day, we come back down with the same amount of force we used going up the first part of the day. So that's our rounded reversal day structure and the vice versa alert on it. All right, here we are with our last scenario, which is our trend day down. We open, gap down, and start with a pop back towards the previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day, better known as our golden window, the best time to trade during a trend day. We find our midday chop around either the possible queen or king support area. And usually we start off the second part of the day with a head fake looking to continue lower, but at some point we get kind of a pop or rise back into the close. But also, with that slow warming bath, warming up to a capitulation type move, this could get very crazy at the close, and we could pretty much fall off the cliff and just kind of keep falling lower instead of that pop back up right now because of the rising concerns with the dollar. Because like I said earlier, I will be keeping a close eye on the dollar as the dollar continues to rise. This is a sign of fear in the market, and this is the flight to safety, the US dollar. So continue to watch that along with VIX to kind of give us a clue of whether we do kind of hit some kind of stall out moment down here. So those are the scenarios of the day. We have to be very, very careful because things are at that point where it could get ugly in a hurry. And like I said, that the VIX products are pretty much almost flat now, making it easy to go either way. So as I like to close out the pre-market as what I think is the most important job as a trader, and that is to protect the capital that you already have. And we do that by knowing and understanding the risk that we have in each position and managing that in accordance to our account size. As always, wishing you a positive trading day. Hope you have a great one.